Welcome back, everyone. As promised, I wanted to follow up with the last video on the setup and the signals and what the Person Algo Optimizer does. Much to surprise of some, when we look at a market that rises up, and I pointed out to you about that volume divergence, a market that makes newer highs on corresponding weaker volume, it suggests that a market is vulnerable for a decline. And that's kind of a neat function of helping to identify from a discretionary standpoint whether or not your system's working well. The system, as I pointed out to you in the last video update, that every trade is not a winner. It went short, but it quickly gets out and then it catches momentum trades. Now, it's designed to do a couple things. A, get out at profit targets, and B, get out of half the position and trail a stop so that if it gets out at half of profit, and the market continues to go up, you're still in the trade, and if it goes down, it'll stop out and allow you to participate in the trade. This system, we're only using 2 lots, as you can see. So what we shared with you last time was, hey, the system, this is what it's been doing, this is what it did, there was a performance that we had, and then it went short. It liquidated the last long position, it trailed the stop, so it liquidated the long. You can see here, long 2, exits 1, gets out of the other, no longer long, it's flat. Then it entered a new short position, and as you can see, it held that position into the overnight session and exited half the position on its profit target, which again, the orange line is the stop level and the yellow is its first profit target. Notice that about 4 bars later, it gets out, and the reason it gets out, it got out because of a trailing stop function. So that was what happened with the S&P to conclude that algorithm. So number one, a couple things happen. It enters in on signals, it protects us with stops, it scales out of positions, and then it trails stops to allow us to continue with the momentum of a trend if it continues. Let's share with you some other trades that occurred on Thursday that we covered both in the trading room as well as from a discretionary standpoint, and share with you how the system actually picked it up algorithmically. All right. We were looking at bonds and a little oversold, and I know that bonds were, with yields going up, bond prices going down. A lot of people very bearish bonds, thinking it's bondageddon. I'm not even pronouncing that right. Armageddon for bond prices and the crash and destruction. But what we were looking at was the fact that the volume analysis was suggesting a potential exhaustion of the breakdown, and we had a little bit of bullish convergence in there. So that's an important feature. But we were also looking at, I think I've explained this a few times, that gray line on the person's indicator is my last conditional change concept, something I wrote about back in my second book called Candlestick and Pivot Point Trading Triggers. Now, I just revealed this in that book. It's 14 years ago, and it's part of our indicator that helps us to identify true breakouts of keystone points of interest in the markets. So one of the things that we looked at today in the bonds was to maybe ignore a buy signal as it was still below resistance. Now, what's a buy signal? Many of you would say, hey, that's person's high closed doji pattern, and you would be correct. It is. And as you can see, it actually does go long. What we were looking for in a discretionary basis was for the market to break out above and close above, and you can see the candle close above the last conditional change. So from a discretionary standpoint, we went long discretionarily at that level. The system went long a bar earlier and was able to scale out of long 2, got out of 1, and it is still in a long position trailing a stop. So that's why you see only 1 long out of 2, because it is still in the trade. The market is still live. It's still in an open trade position right now. So with that stated, this is the last conditional change support, the white line in the sand, right? And as long as we see these white lines, as long as the market continues to trade up, it will trail that stop until one of 2 functions happen. Either you override the system and get out, or B, you get out before the close, and then a third point is maximum bars. This is another system that is programmed to only hold for so many bars before it exhausts the time or holding period for that trade. So that was the bonds that we did today in the live trading room. Now, there was one other trade that we stalked, and it looks so far like we got this one right. This was a pretty dynamic trade as well, and it was in crude oil. Let's take a look at that one, because it does actually, it's just fantastic of how it all lines up with what we were thinking discretionarily, and the system catches it. So watch. A moment ago, I showed you about my volume indicator and how it helps to confirm bullish convergence. Well, the opposite is true for bearish divergence, meaning when a price makes a new higher high. So at point 2 in price is higher than point 1. The corresponding volume level at point 1 with the indicator versus point 2. You can clearly see that point 2, as the volume indicator reflects, is lower than the price action of the corresponding price to indicator relationship. That's what I'm referencing. So for those that do not maybe have heard the term divergence, it's just a price to an indicator comparison. If a price makes a higher high and a corresponding indicator makes a lower high, it's what we consider bearish divergence. In a volume tool such as the one that we've created here, which measures the rate of change of volume, not in absolute value, but in terms of percent change, and it puts it on this histogram component, it really helps to identify and highlights and just really pops on the screen those bearish divergence patterns. Now, combine that with what it doesn't tell you, the volume doesn't say to get short. You need a trigger for that. And what's the trigger? Many of you that use Thinkorswim have come to found to like my PPS indicator, stands for Persons Pivot Study. So on Thinkorswim, these arrows are supplied to you. Those bullish and bearish momentum indicators are supplied to you. But this is TradeStation, and this is our Person Algo Optimizer, which basically what we're doing is we're adding multiple levels of criteria and code to allow us to buy on certain areas, placing stops in the market, and then taking profit targets and exiting the trade. So with that said, what we were looking for today was identifying we were in a condition of a bearish divergence in volume. We were looking for the market to roll over. And the first thing that we identified was this, as you can see, white line in the sand. This was a last conditional change, and we said wait for a trigger, a sell signal, to close below that line in the sand on a sell signal, and then you'll more than likely get some downside momentum. And guess what? That's exactly what happened from a discretionary standpoint in the trading room, and it's nice to see that the trade system, as you can see right here, that little arrow, sideways arrow right there, the red one, it's just entered the short position, went short 2 contracts. Now, what's happened is it exited the trade and it re-entered a new short. Why? Because the criteria is still met. So it's now going to have a different risk. It took profits on one. It's going to make a smaller risk factor and go into a new trade if it continues to move lower. So that's the crude oil, and that's what we did for the Algo optimizer, specifically targeting crude oil. Thank you for watching. I hope you found that interesting, as well as exciting to see that we've got volatility, we got signals working, and the market's back to functioning where it's not just like the equities going up every single day. We got exciting moves coming back into trading. So if you have stepped away from the markets and are looking to get back in, I'll tell you what, things are coming well, very well for 2018. Thanks for watching.